Everyone, welcome back to our channel. I'm Pallavi Sehgal, and this channel is about the business of luxury. From today onwards, we're going to be starting a new series that's going to be about the daily analysis of the news. So, herein, you can get your 10-minute small segment on what exactly happened during the day, what are the major news stories in the luxury business, and the analysis of it in terms of how exactly those announcements connect to the strategy of the brand. For example, let's get started with today's news. This is the Row collection for the fall 2024 women's wear. Now, there was a lot of hue and cry about Row not allowing phones in their uh, collection presentation. And we saw a lot of coverage about how they're trying to control the media, how they're trying to control what exactly comes out about the brand. But then it did have an effect in terms of when the newsletter landed in everybody's inboxes as to this is the women's wear 2024 collection. Everybody really did check out the collection. For example, for me personally, I'm not checking out all the collections. I'm checking out the collections of the brands and the designers that I like, and also the brands and the designers that are trying to do something new. And because the Row tried to kind of control this, when this mail landed in my inbox, I was the first one to check it out. I wanted to see what exactly the collection was about. And this is it. And this is the collection here in front of you. Let me take you through the collection. So it is a nice collection. It is very aesthetic. It is very laid back and pared down, and especially very much in sync with what the Row has come to be about. And you can check out the collection in more detail on the brand's website. And it is a really, really nice collection. I really liked it. And this was the cover image, which was there in the newsletter. And it definitely makes you want to see what the entire collection is all about. Now, this is very much in sync with how the Row has branded itself. It has always been very subtle. It has always been very quiet about how it kind of brands itself. It is more of a behind the scenes brand rather than a brand which kind of does outward marketing. And this is something that we covered in the case study of the Row, and you can find it in our channel. This is basically the video, and I'll link it in the description also, where we decoded the brand aesthetics and the brand marketing and the brand strategy. Now, coming back to this, once you kind of see the collection, you kind of understand that why exactly did the brand do this, and also how it kind of links to what the brand is all about. And it's in sync with the aesthetics, in sync with the brand story of the Row. Besides this, the other important news is that while a lot of news is being covered in terms of how there is a rebound in luxury, still we have analysts saying that luxury is not about to rebound just as yet. We have analysts from Jefferies, from HSBC, who are suggesting that they're still bearish on the luxury stocks despite a rebound in the prices and despite a fighting talk from company chiefs, from Bernard Arnault, from the Richemont chief also. And they say that it is not a good time for the investors to chase the luxury stocks just yet. So that is also one of the news. And why exactly I wanted to talk about Bernstein's analyst, that is Luca Solca, and he is sticking to his original outlook for 2024, and he believes that the fundamental question is about how much slower the consumer demand will be over the next 10 months. And while he has taken note of the faster moderating European domestic consumers, the Chinese consumers are the ones that have not come back, and it's with less of an overwhelming gusto that they've behaved from the American and the European consumers. And similar outlook is repeated by Jefferies and by HSBC analysts also. One of the good things for all the people who follow the luxury watch business and who are watch connoisseurs by themselves, or they are in the business of luxury in terms of the watch segment, there is more of a realism which is returning to the prices of the second-hand watches, especially when we talk about the auction prices. So here we have an article by Watch Pro which gives us the recent auction prices of some of the major brands like Rolex, Omega, Tag Heuer. And if you compare that, for example, this is a Rolex watch, and it is estimated to be sold between 20,000 and 30,000 pounds, and it actually did sell between the range. It's sold between the 27,176 price range. And then we also have other watches, and if you go down the entire article, you see that basically the watch prices in the auction have started to match what the estimate of the watch prices should be. It is not a double or the triple amount to that. And this kind of brings us to people who are actually interested in watches, who are not flipping watches. They would come back to the market, and this will have a positive effect in the industry. So besides this, there was one more thing that we wanted to talk about, and it was about the report that came out. For example, the Swiss watch industry report from Morgan Stanley and Lux Consult, and Rob Corder has decoded the report, and I really wanted to share that with you. In terms of, first and foremost, he says that the performance of the top 25 Swiss watchmakers is almost 53% growth, and if you compare it with the next 25 watchmakers, it is only a 5% growth over 5 years. So that is something that is very interesting. And second is that privately held brands did better than the publicly traded ones. Private watchmakers saw an average rise of 43% over the 5 years since 2019, and those within the publicly traded ones, for example, LVMH, Swatch Group, Richemont, Kering, they rose by a modest 16%. And thirdly, pitching four-figure watches as affordable luxury has really not paid off for a lot of brands. So a lot of brands which are trying to sell their watches within the 1,500 to 3,000 range and selling them as affordable luxury alternatives, they have not really performed well, because as per his analysis, he says that to a Swiss, 1,500 to 3,000 euro price tag might be considered affordable, but 99% of the population that is not. So a lot of brands who have been following this strategy will have to rethink about that, and will have to rethink about their pricing. So that's it that I have for you today. I hope you've enjoyed this video. Do stay tuned in for our daily updates of the news analysis that we'll be bringing you every single day. Thank you.